Good day, traders. It's Friday, October 2nd, 2020. Your cherry bomb trade is ready for you now. It is a short put vertical in Spotify. So if you don't mind trading in a product that's not super liquid and you don't mind trading through earnings, then Spotify is a good trade for you to consider, especially if you like selling premium. It has an IV rank of 63 right now, and its IV percentile is almost 80%. So, hey, almost 80% of the days have had a lower IV than right now. Granted, with earnings coming up, I don't know that you should expect that IV to drop right now. But hey, let's take a look at this trade, shall we? But first, let me introduce myself. Hi everybody, my name is Neil and this is Option Theory, and thank you so much for clicking on this video. And if you are a subscriber and you just watch all the videos, man, if there was like a double thumbs up, I would give it to you. So anyway, if you're new here, head on down to that description. The best thing you can do is subscribe to that Tasty Trade email blast, because today's email lets you know that, hey, maybe you like Joe Rogan, maybe you don't, but he apparently signed up with Spotify right now, and that might be providing a boost and explain why it has gone up. So those are the kind of things you miss out on, some of the background as to why a stock might be behaving the way it is. I think you would enjoy these emails. I suggest you go down there and sign up for them. We put cherry bomb trades on inside of ThinkOrSwim in the simulated trading platform, so you can practice your mechanics, you can test your trade ideas, your trade strategies. I call that testing our theories. And we do so in a simulated trading account, so you can have all the learning without any of that risk. Maybe someday on your own, you can move into trading in a real live funded account. All right, everybody. So we are once again, we're going to finish off this week here in ThinkOrSwim web version, because I think it's worth taking a look at, right? So here I am, I'm in the paper money account right now. And I'm actually looking at all accounts. I just want to take a look at the margin account right now. Not that it matters, but here we go. I'm going to hit find a symbol and we're going to put Spotify in. Now, with Spotify active, I'm going to make this guy go away so I have a little bit more real estate here. You can see that just putting in that ticker symbol there, it lets you take a look at your charts and studies that you have here, right? We can see that the Bollinger Bands have been expanding, contracting, expanding, contracting, and it would even appear that they're contracting a little bit right now. Maybe that's because it's been coming back up, right? But anyway, I don't put too much weight in that. Maybe you do, but we're going to go ahead and we're going to build out a vertical today. So once again, you could click on this options chain and wait, but I'm just going to click on the vertical. And I know I'm going to be doing a put vertical. So the first thing I'm going to do is click on the puts to change it over to a put vertical. You can see it already is building us a risk graph down below. I mean, we know what a short put vertical looks like. In this case, though, it's going to look like one of those where it would be a low probability. So let's first change our expiration to the correct expiration for this cherry bomb trade, and that's going to be the November weeklies with 42 days to expiration as of today, like I said, October 2nd. So the earnings are near the end of October, so we're going to trade right through those. And we're going to be selling, let's take a look at these strikes again. Let me do the selling one. I want to sell to 25 and buy the 22.50. I believe that is what we're looking at here for our cherry bomb trade today. But I would even say, consider this. If your probability on this one, according to the cherry bomb email, is 70%, and I think the P50 is like 72%, you are collecting 1/3 the width of the strikes on this one, just about. It might be that we need to go here to 227, 225 on this one. Why would that be the same? Why is it giving me the same credit? Probably because it's not particularly liquid. So let's go back to the original strikes here on this one. What I would say that you could consider is for this one is maybe going $5 wide and see what you get. You know, this one's going to be interesting to see if we get filled on this one due to the liquidity. We could take a look. Let's go hit the options chain. We're in a not particularly liquid. Like I said in the beginning, I didn't say it actually, but I show it in my thumbnails. It's got a rank of 2 out of 4 for liquidity. And then when you go into weeklies, you're going to get even worse liquidity. So let's go ahead and look and see if we get. Once again, I'm clicking here. Oh, and it actually showed up. Nice. I need more strikes on the put side. This is where we are, and we are looking at very wide bid asks. So that's very likely what we got going on there. And if you look at the open interest of 0, right, it's not looking good that we're going to get filled. Kind of like yesterday's trade in Netflix. I had someone tell me that they did get their trade filled yesterday on Netflix. Mine did not, and I had 2 put on. I had 2 different Netflix trades, one on my IRA and one on my margin, different widths, which was what I would want to do today with this one. Try out different widths, see if one works out better. But I'm going to leave it as it is. I'm going to hit review in just a moment here. We can see, looking at our break-evens, you can't set them to chart here, but you can see them briefly on the chart there. You can see that the break even here is just below, right, this support level, we'll call it right here. So that's pretty good if you like that technical analysis stuff, right? So we know that if we get filled at 75 cents, then that's our max profit. And you take that away from 250, right? Then that's going to be your max loss. So we'll see that here, max loss here of 175. All right, I'm going to go ahead and I'm going to hit send. That's going to put that in my working orders. And where are my working orders here? I believe over here. Do not have any working orders. Did I not hit send? Maybe it hasn't gone through yet. I feel like yesterday and the day before when I've put trades on, I get a little pop-up here that says that order went through. Interesting. Try this all again, shall we? Look at that. Earning live on TV. We're doing vertical here. We're doing puts. We're going to be in the... Watch is going to put the trade in twice for me. November. We're going to do the 225. Sell the 2. Okay, there. Review. Please note that you have selected a weekly option. Yep, that's right. And send. Hey, there we go. There's that little pop-up. Let's go back here. Click this. Choose that little back arrow here. Oh, and I've got 2 in there. Excellent. So I'm going to choose one of these, and I'm going to cancel one of them. Just a little bit of a delay there. That's all right, right? And when it says here partially delayed data, you can see what's actually real time are these exchanges here. So you're not really fully delayed, right? That's what partially delayed means. All right, everybody, if you made it this far, wow, thank you so much for staying tuned to the end. That does help the algorithm help me. And since, you know, I'm just doing this, I love doing this, but, you know, it does take time. I do appreciate that you watch them to the end. And I do appreciate when you hit that like button. So if you feel like I deserve that like, you deserve a like for getting this far. Please hit that like for me. And if you haven't subscribed yet, I get it. But consider someday hitting that subscribe button and ringing that bell, because these trades, of course, we want to maximize our theta decay in our short premium trades, right? And get in when the getting in is good. All right, everybody. It's been a fun week for me. I hope you had a good time. I hope you were profitable. And I look forward to seeing you next week. Until then, happy trading.